Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is CPI Live. Today, we're going to take a look at the latest installment of the United States CPI number, the Consumer Price Index. It's going to give us our latest inflation data, and it's going to drop in about 10 minutes. I think we're in for an interesting show. We're going to look at our expectations ahead of time. We're going to do a little live trading. We've got a live trade going right now that is a high-risk maneuver. I don't recommend doing this essentially anytime, but if you're going to do it, well, at least have a stop loss and a profit target. This is risky trading right here. We've got a 30-minute chart, Euro USD, 920 EMA crossover. The 9 EMA crosses over the 20. Essentially took this long right in here, looking for a nice one-to-one payoff. Stop loss, I really do like the stop loss here. So if you're down there right around 116.75, I'd probably move that down to maybe 74, somewhere in there to give yourself a little bit more room. But we're looking for a move. So it's an interesting play. I think that it's probably has a little bit better chance than normal of succeeding. Just remember, when you trade during a big-time news event like a CPI or a Fed meeting or an NFP, what happens is slippage can be a real issue. The spreads go crazy, and a lot of times what you have at the market there to get out, your stop loss is a stop market order. A lot of times you don't get filled exactly where you should be getting filled. So I'm watching this one closely. I don't know if it's going to work or not. One of the things this has going for it, we do have sort of a buy signal there, Euro USD 30-minute, and you've also got what I call a hard out. You know exactly where you have to leave the market, and that's right down there beneath that swing low. You could play a little bit tighter if you wanted to limit your risk and maybe go right beneath the signal bar there. That may not be a bad idea either. But for something like this, the best thing to do is just to have a finite profit target and a finite stop loss. So I want to welcome everybody out there in YouTube land. Feel free to drop in with any questions, any markets you want to look at, anything you really want to do. So good to see you, Tina Jin. Good to see you. Welcome, Rudy Banks, the first time here. Well, all right. Welcome, Rudy. Ask anything you'd like, and we'll see if we can get you some answers. Tuku, good to see you. Tuku, Andrea Garwal, always a pleasure. All right, everybody, let's go ahead and just run through our expectations before we get started here. Remember, if you want to trade anything under the sun, go to Switch Markets. Got some great resources there, sort of a nice drop-down tab that's right behind my picture. Resources, got everything for you. We're doing always working over at Switch, trying to create tools and bring value to the trader. So that's big as well. All right, week 15, it's been all about Iran. The rest of the events really haven't mattered much at all. Today, it's going to be more of the same. However, CPI typically drives participation, and we're going to have an opportunity potentially to make a couple of trades in the aftermath. So what are we looking at here for CPI? Well, we're basically looking for CPI to grow. Inflation, we're thinking it's going to go up. Why? The fuel shock that we've seen, that we even started a little bit before the Iran war and those initial strikes. We think that CPI is going to come in a little bit higher than last time, and I have to tell you, it's a very dangerous time to be measuring inflation. This event here for March, well, you're probably going to start seeing those effects. The big one is going to be this last month, the April numbers. When those drop, then we could basically see a big-time jump in inflation, and that is going to screw the dollar up 6 ways to Sunday. Right here you see the USD dollar index. Right in here is when Trump got inaugurated in January. We saw a weakening of the dollar, expecting dovish Fed policy, expecting that policy to try to spur economic growth in a big recovery. Then things changed. Things have changed in a big way. We sort of flatlined down here, got the big rally in March because of the war. All of a sudden, bond yields and the dollar became a sort of a safe haven. We saw metals sort of take a hit as the dollar gained. And that was not much of a surprise during periods of war, but it did surprise us a little bit this year. Metals have been so strong. And when you're talking about the Strait of Hormuz and all of the uncertainty out there, the unknown unknowns, people are still piling into the dollar. It was a fascinating time to be trading, and honestly, a very difficult one. I've talked to a lot of traders out there that had a really difficult March. If you did, I hear you. I feel your pain. But April's going to be big, and we're going to look at our expectations for the Iran war and its resolution here before we sign off today. So, big time rally. Now we've sort of given back some of that, and as you see that dollar go down, you've seen things like silver rally a little bit, gold getting back up towards 5,000. That's absolutely key as well. So the dollar still in a bearish territory. However, I was really calling for a test of these multi-year lows down in here, 89, not while the war is going on. That won't happen. So rate cuts looks to be off the table. Rate hikes, FOMC minutes last Wednesday, the FOMC was talking about, well, there's as good a chance for a rate hike as a rate cut. Well, if today's inflation numbers come in hot and it's a very difficult situation for the U.S. economy, boy, I'll tell you what, if they believe inflation's a bigger risk than a contracting jobs market, this could be fascinating. This could be fascinating to see a rate hike this year. It would destroy market sentiment and really hurt risk assets across the board. Let's go look at the DXY. The other thing we need to look at is our VIX. Mr. VIX, the VIX CBOE Volatility Index. Long-term average right around 21. That's our benchmark. I've been watching the VIX for a lot of years, and I will tell you that 21, pretty good level. It's a pretty good level. I would be watching that as being your long-term benchmark, sort of your average. You can see these giant spikes, all times of crises, becoming more and more common, seemingly, as we roll forward in time. Right here, about as high as it got during this war has been 35.30, not even close to the big tariff panic that we saw back in April of 2025. However, the VIX is headed down, and that means that the markets are starting to price in this war, and they're starting to be cool with it. For lack of a better term, they're starting to say, okay, this seems to be the dynamic. Everybody's calming down. Money's actually going back into stocks. It's a fascinating dynamic. I mean, people are going to be writing books about this dust up and what has happened over the last 6 weeks, 5 weeks, 6 weeks. They're going to be writing books here. I expect the first ones to be out later this year. Hell, maybe I'll write one. Who knows? But it's been really interesting trading. Volatility index. Remember, volatility is always forward-looking. So when we build the VIX and we look at the VIX, we're pricing premiums of deferred month S&P 500 options contracts. As those premiums start moving around, the VIX goes up, and that means volatility is coming our way, and uncertainty is headed our way as well. So news of the day right here is going to be CPI. We're looking for a hot number. We will see how it goes. A little bit later today, we've got the Michigan not the inflation expectations, but the consumer sentiment. This is fascinating stuff, and we may talk about it a little bit later when we have a bit more time after the release. But Michigan consumer sentiment used to be a 5-star event. Not so much anymore, but here's what I want to show you, and here's how it all ties in. Sentiment levels, consumer sentiment levels were very high going into COVID. They've never recovered. I don't care what any economist says out there. I don't care what anybody on CNBC says. If they get me on the phone, I'll do an interview. We'll talk it over. Sentiment has not recovered, and why is that? It's all joined together, guys. It's all full circle because prices are higher. The number one things that kills prices is the number one thing that kills sentiment is pricing. That's the bottom line. If you have high inflation, your sentiment is always going to be depressed. It's just the way that it is. All right, let's take a look at U.S. oil. This is the straw that stirs the drink. Right now, we're sort of in rotation around 97.50. I would be watching this relatively closely, this sequence. On the daily, big-time daily sell-off, still beneath 38%. A lot of people believe peace is coming. We'll talk more about that after the number comes out. We've got a big summit with J.D. Vance, the Vice President of the United States, over the weekend. Sort of his time to shine. We'll see if he can get the job done. As far as gold goes, really strange, isn't it? This is a weekly. Looks a little bit like this daily, but the weekly, I'm still relatively bullish gold, but that dollar is dictating policy towards metals more than it typically does. Got a nice resistance level up there at 49.09. Somewhere in that zone is absolutely fascinating to me. I think we may be able to take a short up there early next week if we don't get there even today. I mean, today could really unfold to be a crazy session. Dollar yen. This is what I'm looking at. I really love this level. I'm sort of frustrated we didn't get it yet. Very frustrated. 157.31. We're up there at 159.25, somewhere in that zone. Doesn't feel like we're going to get that at all right now. So interesting stuff. All right, we've got T-minus 1 minute or so before this number drops. Let's go ahead and show you this 920 EMA crossover play out. This may go really well or may go really poorly. It's all about what the CPI figures say, and we'll see. We'll see exactly what happens here. 29 seconds. Interesting stuff. I'll give you the report if I can find it here. We're going to be looking for as soon as you guys see the numbers, go ahead and just yell them out in the live chat. CPI candle up and down. I don't know, Gain. If I knew that, we'd be rich. Joshua, good to see you. Joshua, welcome. Fressy, I'm doing very well. Thank you for joining. Good morning. The Theron. Yeah. Okay. So there's the move. A little bit of bullish price action here. So the indicator's actually doing its job. Remember, the first few seconds of this mean absolutely nothing. Typically, you see a big move and then a reversal. So it sounds to me, or at least looks like by that initial price action, that we are seeing that maybe a weak number, something like that, or maybe something that's not going to prompt an immediate rate hike. Decent trade. I mean, you moved a little bit. This is sort of what we expected. I love CPI. Sometimes CPI really moves the candles. It's not going to do much today. It's not going to do much today because everybody's thinking about Iran. That's for sure. Let's go ahead and see if I can find a number here. CPI. Where is it? CPI. Let's go ahead and get... Remember, sometimes things mean something and sometimes they don't. All right, here we go. Friday, April 10th. That's today. Let's go ahead and have a look at the report. Boom. What does it read? The consumer price index for all urban consumers increased 0.9% on a seasonally adjusted basis in March after rising 0.3%. So we were expecting a 1% pop, and we got 0.9%. So basically in line with expectations. You're going to see rotation after this. It's all about the war right now. Nobody's looking at this stuff. The U.S. Bureau of Labor Statistics reported today over the last 12 months, all items increased 3.3% before seasonal adjustment. As far as, the categories, we're traders. We're not necessarily economists. So when we're looking at stuff like this, I'll unpack it, maybe write something later today. But the big things you need to be looking at are always food. Food's a big one. Energy, we know energy is going to be in sort of a precarious situation just because of what's going on in March. What is your big rally there? 12.5. Well, there you go. So that's where the guts of all this is coming from. Fuel oil, energy services right there. Fuel oil, that's big. Also, you've got what down in here? How about a contraction? Used cars and trucks. All right. Prices on used cars and trucks have gone down. Why? Because you got a bunch of people out there that have to unload their debt. That stuff like this, guys. I used to call it my used truck and my used car indicator about economic prowess. The more of them that I see parked along the road with for sale signs in them, the weaker the economy is getting. You can pretty much take that to the bank. So right there, what do we have for the Euro USD? We've got a nothing burger. We've got a nothing burger, and I'd love to get big moves and a lot of things we could do with big moves. This right here. I mean, if you have a position, great. You're probably going to be in it for a week. That's sort of my thinking. And at this point, I don't recommend taking home anything over the weekend. Too risky, way too risky, and I'll talk about why here in just a minute. As far as our gold chart goes, let's go down. Let's take a look at a 1 minute chart on gold and see if we can get something going. All right, decent move there. Sort of bullish for gold. Why would it be bullish for gold? Anybody? Who knows at this juncture? I mean, it sort of came in as expected. So what's the idea there that we're not going to maybe raise interest rates? Maybe our interest rate expectations are unchanged. So something like this on a gold chart, it's nice big volatility, a lot of confidence stepping up and buying from right there. So you go right here to our paper trader. Remember, everything I do here is on demo. It's not live rounds. I sort of gotten a little bit of hot water trading live money and actually showing returns for last month. If you guys saw that live stream, but that's okay. We abide by the rules. So something like this. $1. Let's go ahead. The limit order, the way you would execute this would be a buy limit, and you're looking to go right there at 38%, somewhere right in that zone. Now you got to move. You got to move your Fibonacci's up a little bit, but that's okay. We'll do it. Right there, we're going to go bottom to top, somewhere in that zone, and then you're going to want to just move this up as price rises and see if you can get a pullback. It can be labor-intensive trading Fibonacci's like this, especially on short time frames. Typically, I like longer ones. 5-minute charts, 30-minute charts, 4-hour charts, dailies, weeklies, monthlies. That's where the real value of this type of trading comes in. But for right this second, if you wanted to try to scalp it on a 1-minute chart, essentially what we're doing is just waiting for a pullback. So nice big robust move in gold. We can't really argue with what's happening here. We went from about 47.64 all the way up to 47.81. What has this done to the dollar? We'll get back to that in just a second. So what has this done to the dollar? Hurt a little bit, right? Why would it hurt it? Inflation's up, right? CPI came in year over year, period over period. It's up, right? Came in line with expectations. It means that the damage from the oil wasn't as bad as they thought. And that is fascinating to me because it typically is going to get worse in the coming months. The inflation will, especially based on the oil. But something like that, Well, we'll see if we get it. Doing well, Fressy. Thank you for asking. Good morning. Market will crash. Discord? Nah, the market's not going to crash. Market's not going to crash. Markets aren't going to do much of anything today. And like I said, we'll talk about the summit that's coming this weekend. Let's see. Something just happened. Yeah, the CPI dropped. That's for sure. Trade Daddy. Good to see you, Trade Daddy. Welcome. Chris Arthur, we had a cup and a handle on the gold. What time frame, Chris? More than happy to look at the time frame on a daily. I love daily cup with handles. That's for sure. Daily. Let's see. Plug in silver from 74.91. Should I hold? I can't give financial advice. Plug. I can't give financial advice. As far as silver goes, though, we will pull it. Let's pull a chart right here. We're not going to get really any action there. We might scalp the dollar yen here in a minute. All right, silver. 74.91. You're above 75 now. Odds are you're going to get rotation around that level. TPO charts, we're not doing that just yet. Too early to do TPO charts. You need to wait a few hours to let those ranges set up. So if you're from down here, number one, hell of a trade. Very nice. You got a nice big banger there. You're up about $1. I'd say if you were up a bunch of money, I would consider just taking it, just because we haven't been able to deviate. We had a big runner here, pull back to 75, boom, nice runner here, pull back, and now you're getting right up into that area where the sellers have been very aggressive. So interesting stuff. We'll look at 920 here for silver in a second. Okay, so that right there was our trade. Nice big strike. We sort of took a bigger draw than I thought we would take, but in any case, you can see what happened there. Big washout in gold. We actually made some money because we were filled way down here. Huge volumes. So this is sort of the deal when you're trading in this type of dynamic, and these are supercharged. Really a good trade, though. Came down, went against us a little bit, jammed right back up in our favor. Pretty good trade. Risky, of course. Everything is. But I don't really love that kind of price action like that. Let's go to gold futures. I want to know exactly what happened right there. Okay, 1 minute chart gold futures. Now this is the key. When you guys are breaking down gold, I mean, I can go over charts and I can show you levels and give you my insights and analyze things all day long. But the one way that the futures markets have it sort of above and beyond what you see in the OTC markets is you know exactly what the volumes are because they're exchange traded. I don't have to sit here and do tick volumes. I don't have to guess. A lot of brokers, OTC brokers, don't even look or don't even use or report volume data for the gold. Now, even if you are trading spot gold, and I recommend it's in most people's portfolio somewhere. A lot of people are trading gold. Sometimes flip over to that front month gold futures contract that's listed on the COMEX on the CME. Gives you a good idea of when the sweeps of volume come in. That is a textbook sweep. What happened? What happened right here? That is not normal. We went right here. There was your CPI figure, came out. Right there at 6:30, the volume was 709 contracts. Then it dies way down. Still hot. Still a lot of contracts for 1 minute. Dies way down. And then it goes down to 142. And then you get a huge sweep at 971. What in the heck happened at 6:36 my time, 8:36 Eastern, that didn't happen back here at 8:30? That type of thing right there, you've got to keep a close eye on. That's what we call a sweep. And that's incredible volatility. The price went against us significantly and then bounced right back up in our favor. So when you're trading, you're looking at spot, and if you have access to the data, you can find it free on the CME's website. It's just about 15 minutes later. And if one of your trades goes wrong or there's huge volatility like that, go over to the futures, check the futures contracts out, try to find out what's going on with the volume, and then try to go look through the news. I mean, did Trump just drop a Truth Social post or something? That is a huge spike in volume. That is huge. That's bigger than our CPI spike. So is that normal? No, it is not. Still helped us out. We got out with a nice bullish spike, and now we're sort of rotating back down into this range, which, we see it over and over and over again. This initial CPI range inevitably gets filled in. Do you want to be short right now? Not really. Not really. This is the dicey situation. It's been dicey for about the last 5 weeks. So interesting stuff right here if you're ever sort of in the mood to broaden your horizons, if you're just trading OTC markets. It never hurts. It never hurts to take a look at some volumes. So what I'm curious of right now is if that spike right there happened in gold, what happened in crude oil? Okay, nothing. Was it just local to gold? Let's go back over to our Euro USD. Still in the green there. Let's go to a 1 minute. Now, these are just tick values. These aren't real values. This is just tick data, tick volumes right here. This is our 920 EMA crossover. So you can see right there, big volume. Did we get a spike at 636? No, we didn't. So an institutional player stepped in and hit gold at 636, 836 Eastern. That happened. All right, and that's one of those things that's really hard to deal with as a trader. I call it an occupational hazard. Typically, when I'm in the trade, like one of those trades we just put up on gold, I'm looking to stay in for at least a minute because I don't want to get shaken out by something silly like that. However, you do have to have a risk threshold, and if you get involved in a big sweep, it can really bring the heat your way. All right, let's see. Chris Arthur on the 15-minute. That was a cup with handle on gold. All right, let's take a look. I like cups with handles. Gold. See, you can see this 1 minute Fibonacci. This 38% level stubborn. Why? 47,775 right there. All right, 15-minute. Let's look at the cup with a handle. Yeah, well, you're not wrong. You're not wrong. It just depends on how you want to define your cup. For me, the cup would look something like that, and then like that, and then there would be your break. I don't mind that. I really don't mind that. I think it's not a bad one. I would be looking for something like this spike right in here. I don't like that at all. Maybe you could have done it like this, something like that, and then got your break. But let's step back. Let's see if we can get a cleaner one. Let's go to like a 30-minute. Potentially. I like your creativity. I like what you're doing there. I mean, you're looking for patterns. I'm always looking for patterns too. What I like to see with a cup with a handle is a clearly defined sort of a double top. So right here we can say that's a top, and then maybe this is a top, and then a nice pullback. This is kind of dirty in here. I don't really care for that, but we're at war. And we're seeing a lot of dirty charts right now, and there's the handle. So, yeah, I mean, that's not a bad call. I like it. I like creativity. Remember, as a trader, your number one asset's your creativity. Creativity will take you places that it can take you places you never dreamed of. That's how you get in there and you build your own strategies and you build approaches to the market that are rock solid. That's absolutely huge. So, good spot, Chris. All right, Fressy. So essentially this period is mainly for research and updates and less about making trades. Well, I would say that, you can trade it. We've executed trades. You can see our Euro USDs taking a run for the south. Personally, if I was around CPI, I don't like to trade it. I would probably trade it going into the U.S. Open. However, we can scalp it. The gold market right now is active, big runs. Okay, nice 5-minute symmetry here. There's your CPI number. So you could work right from the pre-CPI lows, do things like this. We missed 62%. 38% was pretty much the same as the other entry, right around there by about 40 cents. Pull back there to about 62%. Pretty good move. So, you certainly can trade it, but I recommend at least waiting 5 minutes at least. A lot of folks love to trade it right on the jump or hold positions like we did with that Euro USD. I don't really recommend that. I think it could be very tough. There was a question out there from Plug. He wants 74.91. Is that the hold? Is that the hold for silver? We had an interesting play on silver the other day using this 920 EMA crossover. And what it was essentially was a bid right in here, 4-hour chart. Is this bid still working? Not really. Your bid would have been up here. 75 is the big level. 75 is the big level. So this is a great example right here is when you step back to longer time frames and you take a look at what has happened here to silver. What's happened? Nice big move. There's your entry. Now there's your pullback. Pullback. Now life's starting to get tough and we're moving sideways and we're wondering, what's going on? How are we going to ever get this accomplished? 75 is, when you get this signal, you think you're leaving 75 and it just isn't true. So to answer your question, you're 74.91. If you have a stack of cash off of this trade, it's up to 75.77. Like I said, I can't tell you what to do. It's all about where you have your targets and what you're looking for out of your trade. But just remember that 75 is a big level. So if you hold it and you go back down around 75, which it looks like it's going to happen, you're probably going to be in this vicinity for a while, and you're going to need some fundamental help to move this market. You're going to need it. So good trade, good entry. I love your entry. The question is now what do I do with it? Do I take the money and run? Nobody ever went broke taking the money. I can tell you that. So that's for sure. Let me see. So to answer your question, Fressa, I would say research, get ready, game plan for the U.S. session, which starts in about 45 minutes. 1906, I'm going to let all this breathe. I'll see the markets Monday or Tuesday. See, that's wise. That's wise. I'm going to show you why you probably need to be thinking about sidelining it for the weekend. Can't tell anybody what to do and won't do that. All right, so right here, this essentially, our Euro USD daily crossover that I talked about, I mean, this is the trade. So you could do a number of different things. You could be looking to grab 200 pips. If you wanted to, you could move this. We've got a 30-minute that coincides sort of at almost the same entry point. That's amazing, isn't it? Same entry point. Euro USD, they say buy, buy, buy. We'll see. We'll wait and see here. That's for sure. Let me see, Chris Arthur, does all that matter on the higher time frame? The beauty of the higher time frame, the difference between, say, a daily and a 4-hour chart instead of, say, a 1-minute chart is that the sweeps don't knock you out. There's the volatility is less important, meaning there's less chop. This is a daily chart. This is a nice big flow here. I mean, realistically, if you wanted to take a position, much bigger risks, so you dial your leverage down. But notice, I mean, it's cleaner. And then you go down to, say, a 1 minute. And then look at the 1 minute. 1 minute's all over the place. Boom, boom, crossovers, frequent crossovers. A lot going on there. You could be reversing right now. Okay, now the dollar's coming back. Now this Euro USD trade in a little bit of trouble. Probably going to get stopped out. Wouldn't surprise me. But look at this. So what's happened here? It's the same thing that always happens. Here it is. Here's your CPI number or your big number, your NFP, your Fed report, whatever. Boom, you get the big move to the top side. You get a little bit of a rally and then a reversal. Invariably, we see this over and over and over again in the live market. We really do. It's almost a rule after these big events. So let's go to E-mini S&P 500 futures. What I want to do here is really stress that you gave away a lot last month because of the war, the onset of the war, and they're buying it all back, and they're buying it back fast. So you're still near all-time highs. Just to be at 6,800 here, really, the markets are treating the Iran war and the Strait of Hormuz like it's a temporary thing, like it's a passing fancy. I mean, take a look at this. This is big. This is a huge sell-off and then a rebound. And now, the first week of April, we're 10 days into April, you've got a major runner here that's bought back all the losses, paired all the losses taken from March. Pretty amazing, pretty resilient. I mean, you can't argue with the resiliency of the market. I mean, it's resilient, no doubt about it. People want to buy. So S&P 500, what can we be looking at right now? I want to go down to that 5-minute chart and take a good hard look at what's happened. Okay, so what do we have? Okay, there's 25. There's your CPI number right there. Big spike in volume on the number. A lot of people got long there. Well, I mean, they got long initially, and then they got pounded. A lot of people were carrying longs in there. And now the price is just right back down to where it was trading before, really realistically, right before. So the close on that bar was 68.72, and now you're trading 68.73. The market took you for a ride and then retraced, and now is just settling into rotation. What does any of that mean? We see it more and more and more. It means that these markets are choppy when all of this news and everything hits the markets. Absolutely, absolutely choppy. All right. Let me see, Muhammad. Good to see you. XAU USD buy or sell? I honestly, it's not what anybody wants to hear, but is it a buy or is it a sell? Right now, 5-minute chart, you can see the market's coming off. Essentially what's happened here, Muhammad, is here was your bar. There was your news bar right there, 5-minute news bar. There was your CPI number. Saw the rally. Why? Sort of an irrational rally. CPI came in as expected, means it's growing. Prices are up. Boom. Now we're down. We're just filling in this range. sort of knew that this today was going to be like this, really choppy. You could sort of feel it because it's not a market driver. What I'm saying is there's so much action right now because of the war. There's so many people in the war that numbers like this, they draw participation, but it's not as much to move the needle. So meaning like, okay, let's say we go back to last summer, and I mean nothing's really happening. We're all quiet on the geopolitical front. The markets are relatively not necessarily soft, but they're just calm. Okay, so you take a calm market, and then you drop a CPI number in, and the volatility just goes crazy because it brings a lot of people into the equation. Now, we don't see that because everybody's in there right now making moves, trying to figure out what's going to happen in the Persian Gulf. So when you see a CPI number drop, inflation, I don't think anybody really cares right now. It's all about when do the strikes continue? Is there a peace deal? Is there escalation? Does the oil start flowing? That's what this is all about, and that's why traders in general are always a little bit behind the curve trying to figure out what's going to move the markets. There's one market driver right now, and it's the Iran war. It's just the way it is. All right, so is gold a buy or a sell? Could be any. I mean, I won't even venture a guess. I think eventually we go back up to 5,000. Maybe it happens. Maybe it happens Monday. I just don't know when. Chris Arthur, look at the 1 hour cup with handle on gold is more vivid. I was on a sell before and I entered bullish when that formed. All right, let's have a look. All right, so 1 hour chart. All right, I got the cup. Not seeing the handle. Oh, I gotcha. No, yeah. I just got to go back a little bit. Yeah, there it is. I would say that's your cup with handle. You could almost say you got a cup with handle forming here and then a break. See, that's the beauty of these markets when they get volatile and hot. So there's your double top. That's clean right there. That's clean. There's your pullback, sort of your handle area. So you're in a sell here. Well, see, that's pretty clean. I like that one. As far as the other one goes, we could argue that it's still setting up, but right here, personally, I would have liked to have seen a little bit more on the compression here. So if you were working a cup with a handle, something like this, and this is viable. This is what makes patterns sort of hard. I would still be waiting for this handle to set up, essentially. Now, there's a lot of different ways to interpret these things. I would view this area right here as being the handle. So this one right there, this cup with handle, there's your double top. That's how I always start, like that. And you sort of got that compression in there, and then we break. So that one sort of got wiped out. I like your creativity. I would say be a little more patient with your handle formation. I'm looking for 2 to 3 bars to make a really nice handle. If I see an example, I'll show it to you. But we had a daily silver cup with handle. This is going way back. I don't even know if I can find it now, but this one right here, Chris, this was like the trade of all trades because you got to remember none of the rest of this was formed yet. So you can sort of see what happened. This right here, though, this was a cup with a handle. I thought it was very powerful, and we were spotting it back in December. Boom. Right there was your 1. There was your 2. I liked it because we were outside of that upper Bollinger Band right there. Then we got a couple of days, and then the break. That was a real strong one. We talked about that one a lot. So, to each their own. Be as aggressive as you want to be. It's hard to be patient when you wait for these things to set up. It really is. But patience pays. Patience always pays. Let me see. 1906, still holding an Aussie Swissy from last week, a real sleeper trade. Bought it at 55.45, hoping to de-risk and make it a take profit Friday. All right, Aussie Swissy. Speaking of the devil, cup with handle. This is the cup with handle stream. There's your double top. There's your cup. Now, let's say we get a day or two. Let's say you get another couple days there. Upper Bollinger Band right at 56. That's coupled handle. That's one I can get into. That's interesting right there. All right, let's see. You bought it at 55.45. All right, let's go ahead and spot it and see where you're at. Yeah, not much has happened. You've been holding that for last week. How'd the swap fees treat you? Right there, starting to pull back now. Yeah, that's tough. You probably were thinking that right here you were in great shape. High was 56.04. The high right there was 56.13. Somewhere right in there, you break above that zone, you're probably thinking you're going to run up there and do some real work. Well, there's room to the top side, though. That's tough. I hate it when you get into a real good trade right away and then it starts pulling back on you, especially after you've held it for quite a while. That's for sure. Let me see Johnny. Good to see you, Johnny. Welcome. You said the Euro USD is going down. What time frame were you looking at? No, I just said it reversed. So, I'm actually on the other side of it, Johnny. We've got the daily 920 EMA crossover. That trade right there looks pretty decent. 30-minute chart. Let's go. We had a 30-minute bid, something like that. I would sort of be on the other side of this one. I wouldn't be the only way that. Listen, there's a lot of ways this can go wrong. Believe me. But if the dollar gets its puff and starts getting strong because the war escalation and people start piling back into T-bills and those yields go up, then you're going to see a situation where this trade will absolutely tank. Does that happen today? Probably not. This one probably grinds higher the rest of the day. Now, I don't know that for a fact. I don't know it, but I know we had a pretty good entry coming into that CPI number. As far as why is CPI moving the market the way that it is, sort of already covered that. It's sort of a nothing burger. I don't think there's much. I just don't think it's a big deal at all. Right now, it's all about negotiations this weekend. No question about it. Let me see. Tolodos or Salyer. Good to see you, Salyer. Welcome. Let me see. April Cools for the best, truly best live trading. Well, there you go. We'll be sure. I'll tell you what, April. I'll check that out. How's that? Maybe I can learn something over there. There you go, Johnny. Absolutely. All right, everybody. There's a couple things we need to watch as we roll into the weekend. And, we talked a lot of war. We do a lot of things. It's all about what's coming next. It's all about what's coming next. And there's a reason why I always suggest not to hold positions over the weekend. I think it's a terrible idea. I think that holding positions over the weekend is a real challenge because in this news environment, you can get burned and you can get burned fast. This is it. This is the big event this weekend. All of a sudden, we go from escalation to potential ceasefire, and now we're talking long-term peace. They're sending J.D. Vance in, so we'll see if J.D. has some luck in this regard. This is supposed to be one of his strong suits as a top-level negotiator. We're going to see. The vice president probably in a historic position here. Vance faces a high-profile test of his negotiating skills with Iran talks. Negotiations with Vance would be the highest-level U.S.-Iran talks since 1979. So when we look at this situation, there's a very, very, very good chance that they cut a deal. And what's that deal mean? What's that going to look like? It's going to have to involve the reopening of the Strait of Hormuz. It's going to have to involve some of the things that Iran wants. They want some ceasefire talks. So they don't want any more strikes on Hezbollah and Lebanon. Very difficult. Very difficult. Heading to Islamabad. It's going to be an interesting period to be watching geopolitics. This is supposed to happen tomorrow. So be ready. Be ready for fireworks here. This is one of those things that could sway markets greatly on Monday's open. So if you're going to hold over the weekend, do it at your own peril. You could really get hurt. But this is the big story. This is what we're waiting on. This, in my view, is why the markets are going to be very quiet today, unless somebody leaks information that they already have a deal. Now, personally, I don't think that they do. I think they're far apart with a deal, and both sides are going to have to get some major concessions from the other, and I'm not sure that's going to happen. But they're sending in J.D. Vance, so we'll see. I don't know. I think it's interesting because they had negotiation teams already lined up. They've been negotiating seemingly forever with people, and then the one side, Iran's top negotiators keep getting killed, and now that you've got a new batch of negotiators, and now you got Vance is entering the equation. The whole thing is really strange. It's really strange, and I'm not sure that anybody knows what's going on. So let's take a look at our prediction markets. Remember, we don't really know. Everything's just percentages now. A couple of things that we do need to look at. Carg Island's a big one. A lot of us believe that the U.S. was going into Carg Island on the ground. It just doesn't look to me like that's going to happen. Potentially, something in a potential agreement here suggests that de-escalation may be the way forward. So if we do get some de-escalation and get a peace deal, then Carg Island more than likely is going to remain in Iranian control. It's going to be a part of the oil trade through the Persian Gulf like it has been for years and years and years. Iran-Israel-U.S. conflict ends by. This is a good market that we're looking at now. Now, this is good because this is going to tell us when the markets really are going to get back to normal. Now, the conflict is going to end when the Strait of Hormuz is open. That's going to be a major sticking point. It can't really end until that thing's open in some capacity. Now, they may agree to let Iran put tolls on these ships. You know, it may be the $2 million that they're putting on them now. They may just say, okay, that's the way business is now. They may do that to end the war. I mean, we just have to wait and see. I don't know. But look at these odds. 56% by April 7th, 64, 70, 75, 87. So we're pricing in roughly about another month to this thing. About another month. May 15th, April 30th. Somewhere around a month. 64% believe by this time next week it's over. That means that these peace negotiations, these peace negotiations, are going to be successful. Interesting bet. This is the big one too. Trump announces the end of military operations against Iran by when? About May 31st, April 30th. I think it's going to be probably early May. It looks to me like things are winding down. This time last week, we were talking escalation. We were talking boots on the ground, if you remember that. That market, I believe it's off the board, but they actually did have boots on the ground to rescue a downed pilot last weekend. Fascinating stuff, right? So the Strait of Hormuz traffic returns to normal by the end of April, 21% chance. How about by the end of May, 43% chance? Now the question here is what's normal? Normal, as in business as usual? It's going to look a little different. More than likely, there's going to be an added tariff from Iranian interests on those boats. What does that do to anything? Well, I mean, I'm watching crude oil right now. Here's your crude oil market. It's no accident that you got this big sell-off. Ceasefires announced. Trump backs off of the big strikes, the world-ending strikes, right? Crude oil goes from 117 down to about 90, settles somewhere right around 95. Now look at the last two sessions. Yesterday, it's still a great big range, don't get me wrong, but tight inside of that monster sell-off, tight, and today even tighter. Traders aren't doing anything. Now, if we get information leaked or if Trump says something or maybe the deal or the ceasefire talks are called off, then the market goes crazy. But right now, everybody's just like Fonzie, right? Fonzie, they're just playing it cool. That's it. They're playing it cool, and I don't blame them. I think that this weekend is a way that the insiders are probably going to make a lot of money because they already know what's going to happen. As a retail trader, if you don't have connections and you don't know how these negotiations are going to go or maybe where institutional money is going to go, then you really it's a difficult proposition. It's a difficult proposition. That's for sure. So. All right, everybody. I think that's enough for today. It's about we got the U.S. Open in about 30 minutes, and just be ready. Be ready. Like I said, anything can happen when the Wall Street Open comes across the boards. But for me, I mean, I'm looking at the U.S. futures, equity futures, just slow, really flat and slow, and this is going to be tough. Crude oil, flat and slow. Gold, even gold is, these 0.05%. Up. Crude oil essentially is flat. Gold's essentially flat. Silver's essentially flat. You just don't see this type of action. Equities are flat. Everything's flat. And it's flat because of what? We just went over it. It's all about the negotiations this weekend. So if you go home long or short anything, can't say that Shane didn't warn you. All right, everybody. Happy Friday, Matthew. Thank you for dropping by. All right, guys, that's going to be it for me for a while. I got the next live stream is scheduled in the let's see, it's in the How to Trade trading room. It's for Wednesday the 22nd. So I'm going to be out for the next couple of weeks. Get a little vacation time. It's that time of year. I like to take a break from the markets and from really everything. Typically, right after my taxes are done in every year, because I get a little bit frustrated. It puts me in a bad mood, and I don't trade very well when I'm in a bad mood. So taxes are now in the bag. The federal government got their chunk of me. You're welcome, ladies and gentlemen. Spend it wisely, Uncle Sam. Spend it wisely. So the taxes are done. Probably have a laptop with me. I'm debating whether I'm going to take my platform. I got a laptop that I sometimes take and trade on vacation, but I don't like trading when I'm on holiday. So I'm going to head down to Florida, get some sun, eat some shrimp, try to decompress. It's been a hell of a Q1, and a lot of you guys join me, pretty much every day, and I really do appreciate that. Thank you for joining me. If you need anything at all, reach out to me on howtotrade.com. That's where the education is. Do our best to put out pretty good content. As far as the market calls go, they've been a little more difficult. We haven't had an actual trade update in a while. So we typically put out some analytics and a trade idea every day. That's a big part of what we do over there. But this last month has been really challenging because you outline levels, and it's really tough to trade. And a lot of it, what we've been doing has been intraday trading, which I like to do, but I also like to have those levels out written down in advance, and it just hasn't worked very well because of the volatility. So what I would say to everybody involved, sort of, I don't have any safe conduct. I don't know how this war is going to turn out. It feels to me like right now the markets are becoming at ease with the situation. And there's a lot of optimism out there that they're going to have a deal potentially by the end of this weekend. So these are high-level things. We'll see if Vance has any luck. They're certainly setting him up to be the savior here, the chief negotiator. It looks like they're positioning him for a presidential run in 2028 after Trump's term's over. That's what this feels like. This feels like it's a big show, and I say that in the nicest way, but it could be the biggest market mover we've seen yet, especially if this falls apart. The markets are they're not excited, but they're cooling down, and that means that a lot of people are really optimistic. And if it doesn't work, look out, that's for sure. All right, Tina, enjoy your time off. Your timing is perfect. Going to Florida has no tax. Yeah, right. maybe stretch a little more distance out of $1. I sure appreciate that, Tina. Thank you. Yeah, we're going to put the feet up and take it easy. Bon voyage, absolutely, Jason. Yeah, be a couple weeks, but I'll be back. Not going anywhere. Tuku, thanks, Coach. A well-deserved break. Keep well and do enjoy your break. You guys enjoy yourselves as well. Have a fun time in these markets. I mean, it has been fun. It's been a wild ride, but be careful. We'll be back to business as usual here by the end of this month. Going into May, I think it's going to be back to business as usual, if not sooner, and I'm sort of looking forward to that. I really am. Volatility has been something else. All right, guys, have a fantastic trading session. And as always, trade the action well, and we'll talk soon. See you.